This video, we'll be going over IRS Form 9465 Installment Agreement Request. So this is the form that you would file with the Internal Revenue Service if you are behind on your taxes and you would like to enter into an installment agreement so that the IRS doesn't take further collection actions against you. We've written some articles on our website. If you go to teachmepersonalfinance.com, you can type in the search bar for a variety of collection-related articles, such as IRS Tax Topic 201, how the collections process works, as well as walkthroughs on a lot of other forms that we'll discuss briefly in this video. But so if you are able to, you may be able to apply and have an installment agreement approved without having to file Form 9465. And probably the key here would be $50,000. If your tax bill is $50,000 or less, you can establish an installment agreement online, even if you haven't received a tax bill. And so the top of this form kind of walks you through how you can apply for an online payment agreement without using Form 9465. And if you use this to establish your installment agreement, then any user fee you may have to pay will be lower than if you filed this form directly. However, in certain circumstances, you're going to have to use this form, particularly if you have a tax bill that's $50,000 or greater, and then there are some other circumstances that we'll go over. So you're going to use this if you owe income tax on a Form 1040 or 1040 SR. You're going to use it if you might be responsible for a trust fund recovery penalty. If you owe employment taxes related to your sole proprietorship that is no longer in business, and you may do this if you previously were responsible for individual shared responsibility payments under the Affordable Care Act, also known as Obamacare. So that ended in December 31st of 2018. So any payments that you were responsible for in 2019 or later, you would not need to pay taxes on or penalties. However, if you accrued a penalty before that and it's still on your tax record, then you may file this installment agreement request as one of the ways to be able to pay that down over time. However, you should not use this form if you can request an installment agreement online, if you can pay the entire amount within 120 days, or if your business is still operating and owes employment or unemployment taxes. And then in that case, if you still have a business that's operating, you would call the telephone number that's on your most recent tax notice. There are certain instances in which the IRS has stated your installment request will be guaranteed under certain circumstances. So if your outstanding tax liability is not more than $10,000, if you and your spouse, if applicable, have filed all tax returns in a timely manner over the past 5 years, and you've paid all income tax due, you have not previously entered into an installment agreement for the previous taxes. If you agree to, so that's one condition. If you also agree to pay the full amount within 3 years and comply with tax laws while you're paying this down, or if you're also financially unable to pay the tax bill in full at the current time. So basically a situation would be you've been really good about your taxes for the past 5 years, you've filed all your timely tax returns, but for some reason you got hit with a big tax bill, you can't pay it all at once, you can't pay it online within 120 days, but you need a couple of years. And in that case, you could have a guaranteed installment agreement that, as long as that meets those criteria. So if you if you want to look more into that, the fine print is in the form instructions. The example that we're going through today on this form is not in a guaranteed installment agreement. This is just a regular installment agreement request. So if you take a look at the form, you can kind of see that we've pre-filled some of this information. So we're going to briefly go over the different parts of the form, and then we'll circle back and go through it line by line. So in part one, you're basically putting together the installment agreement request, and the IRS is using this form to kind of guide you in the general direction that it wants you to go. It clearly defines certain things that might be acceptable, and then certain tripwires that will require additional paperwork, things of that nature. We'll go over those in a little bit more detail. On the back is a part 2 to this form, which not everyone will need to complete. You'll only need to complete this if you've previously defaulted on an installment agreement, if you owe between $25,000 and $50,000, and if your monthly payment, what you can afford to pay, is less than what you are required to pay. So we'll circle back to that momentarily. Now let's go back to the top of part one. Real quick, should probably point out how the installment agreement will work once you file it. So once you file your request, you'll probably receive a notification within 30 days. However, if it's right during tax season, like around the end of March or mid-April, the IRS says that they'll take a little bit longer to get to that, simply because they're processing so many tax returns. However, if the IRS approves your request, you'll receive a written notice to outline the terms of your agreement and then requesting your user fee. And there is a user fee that will apply. The payment schedule depends on a couple of things. One, whether you're applying online or if you're using Form 9465. And then if you're setting up a direct debit installment agreement where the money is taken out of your checking or savings account on a regular basis, or whether you're setting up voluntary payments with checks, money orders, and credit cards that you can then cancel. So at the current time, your applicable fee ranges anywhere between $31 and $225. So $31 for a direct debit that you agree to online without using this form. If you went online but decided to pay by check or credit card every month, then that fee jumps up to $149. Conversely, if you use this form and you're selecting a direct debit option, then you would pay $107, and you would also request the direct debit using a different form, which would be IRS a direct debit installment agreement. And then if you are using Form 9465 and paying by check or credit card, then that user fee is $225. There is a provision for low income taxpayers. There is a chance, and the IRS defines low income taxpayers as people whose household income is at or below 250% of the federal guidelines for poverty level as defined by the federal government, specifically the Department of Health and Human Services. So if you are a low-income taxpayer, you may qualify for a reduced or even a waived user fee. And I believe that the user fee, you may pay that, but then you get it refunded once you complete the payment, the installment agreement. You can also use IRS form. So you would use IRS form 13844. That's the application for reduced user fees. And then you can also set up a direct debit either from your account, which you would use a direct debit installment agreement. You can also request a payroll deduction agreement using IRS form 2159. And if you do this, then your user fee will be $225, presumably because it's a little bit more difficult for the IRS to work with your employer's payroll department to set up the agreement. So there are a couple of options there, and odds are likely that you may be filing this form with a couple of other forms. And again, you can refer to the instructions. We've written tutorials on most of the forms that you would be required to file in accompaniment with this one. So we'll go through the top and then we'll kind of circle back around. So we filled out this form on behalf of John Q. and Mary J. Smith. So at the top, 1040 is individual income tax return, and they had a huge tax bill from 2020. So John Q. Smith, Social Security number, followed by his spouse's, their current address, and then city, state, and zip code. Now, the IRS does a pretty consistent job of updating taxpayer addresses with income tax returns. However, if you've moved since your last tax return, you'll need to check this box, and this prompts the IRS examiner to look at your records and make an update if applicable. And then you'll enter your phone number, your home phone number in line 3, your work phone number in line 4, and then you'll enter the total amount that you owe, either as shown on your tax return, or if you received a written notice in the mail, use that instead. If you know of any additional tax balances that are due that haven't been reported, then enter that here. So even if that's like from an existing installment agreement, so that would not be on your tax return, enter that information here. And then add those lines up, line 5 and line 6, and in this example we get to a total of $70,000. So briefly, before we go further, I'll give you an example of one of my first clients that I ever worked with as a tax professional. Came to me, and they owed quite a bit of money from several years of running a medical practice as a self-employed individual and just falling behind on taxes. So they came to me and they owed roughly about $90,000, and then their accountant filed the tax return because this was right around the April deadline, and that triggered another $40,000 of tax of back taxes. So they owed somewhere around $140,000, and we were able to work through the taxpayer advocate and through the revenue officer a way to work down the balance to $50,000 or less, and then work through the installment agreement paperwork. So in the end, it was a success story for that client, and I wrote an article about that. You can read more about that story on how we did this as a real life example. Simply go to the website, and I wrote the article. I believe it was something about back taxes. So I'll put the URL on the show notes. So in here, we get to the amount owed, which is, basically we're going to back out any payments that you're submitting with the request or any online payments that you can make. And specifically, the instructions do provide some guidance. So you should pay as much as possible so that you limit the penalty and interest charges. So for back taxes, it's always better to have filed a tax return or at least an extension because there's a failure to file penalty, and that's 5%, like 5.0% of your outstanding tax balance up to a cap every month that accrues up to a cap of 25%. However, if you filed your tax return or an extension, then and then your outstanding tax balance, that's a failure to pay penalty, which is 0.5%, so 0.5 as opposed to 5.0%. That's why your tax professional will always tell you it's better to file and then figure out how to pay down the line, because what they're trying to do is slow the clock a little bit on the penalties and interest that accrue on your tax debt. Again, if all of this was $50,000 or less, you could simply go to the IRS website, set up your own installment agreement, or at least submit a request for an installment agreement online. So if you're filing this form by itself, like with a notice, and you want to attach a payment, then you should attach either a check or a money order payable to the United States Treasury. Don't send cash, but be sure to include your name, address, your taxpayer ID number, either your social security number or your EIN, and a daytime phone number, as well as the year and the tax return. So like a 2020 Form 1040. Now that's a lot to put on a check. But that's what the form instructions say. I would probably recommend that you make a online payment. So that way it's secure online. The IRS uses the highest commercial encryption standards on their website, so payment is secure, and it's a lot better than having a check floating around with a lot of personal information, especially taxpayer ID numbers. So anyway, what the IRS expects you to do is whatever your outstanding balance, you should be able to make monthly payments, and the goal is to pay this off over no more than a 6-year period. So that's why you'll see this little math test right here on line 10, where it's going to ask you to divide the number on line 9 by 72 and enter the result. So line 11A is a subjective number. Basically, it's how much you feel like you can pay every month. Again, when you talk to the IRS revenue officer, they're going to ask you for as much as possible. If you tell them you can pay $1,000 a month, it meets the minimum criteria here. Don't be surprised if someone asks you for $1,100 or $1,200 or $1,500. Because they're in the business to collect as much money from you as possible, so they're going to do everything they can to get a little bit more out of you. So if for some reason you decide to enter 800, and now the number on line 11A is less than your line 10 number, then you're going to have to check this box right here unless you can increase it. So basically, the IRS is kind of prompting you and saying, hey, this looks like a wrong answer. Why don't you go back, sharpen your pencil, and see if you can come up with a better number, right? And if your position is, no, I can't come up with a better number, then the IRS is going to say, okay, attach a collection information statement, Form 433F. So the collection information statement is going to make you go into a little bit more detail about your finances, your cash flow, your income, your bills, and then from there, the IRS will make a determination on what the IRS's position is, whether or not they can squeeze a little bit more money out of you. Again, they're not going to, if you're trying to make an installment plan and it's somewhat borderline realistic, then they're going to try and work with you to the extent possible. But if you owe $100,000 and you're saying that you can afford to pay $50 a month, and your $100,000 tax bill is resulting in something that's north of $1,000 a month, then the IRS is probably going to want to look a little bit more closely at your expenses. So the key here is if your number in 11A or 11B is greater than the number in line 10, that's going to go a long way. Now, if your outstanding balance is over $50,000, then, so let's just imagine that you said you could put in $1,000 a month. If your outstanding balance is more than $50,000, then you're still going to have to complete Form 433F. So you're completing a collection information statement if you can't make your monthly payments, or you're telling the IRS that you can't. If your outstanding balance is more than $50,000, you're submitting a collection information statement. And then finally, the third choice is if your balance is between $25,000 and $50,000, then you have a choice. You can either complete Form 433F, or you're going to have to complete one of these two options. You're either going to have to do direct debit from your checking account, and in that case you would put in your bank's routing number, which is a unique ID number, unique to each bank, and then your account number. Or you can complete Form 2159, which is the payroll deduction form, and the IRS can work with your employer to withhold additional taxes from your pay. So that's the third route. If your balance is at least $25,000, but it's not more than 50, then you can either complete Form 433. You can give the IRS your routing information so that you can then set up your payments by direct debit, or you can set up your payments by payroll deduction. In box 12, since we skipped over that, we'll briefly go back, and you have the option to pick a date that you want your payment each month. So you can't pick a date later than the 28th, because if you pick the 30th or the 31st of each month, then the IRS doesn't have a way to withdraw money on the months that have less than 30 days, right? So February, April, June, September, November. So you need to pick a date between the 1st and the 28th of each month. Ideally, this would be a date that lines up with, cash flow wise. So if you have big bills on the 1st, like a lot of people do, mortgages and rent payments, then maybe if you get paid twice a month, or semi-monthly, on the 1st and the 15th, for example, for a lot of military people and government employees, then maybe you pick the mid-month payday for your payment to come out. If you're a low-income taxpayer, or if you think you might qualify, you can check out the form instructions. But basically, if your income is at or below 250% of the federal poverty guidelines, then you can check this box. You would file IRS Form 13844, which is the request for basically a lower reduced user fee for installment agreements. And then you sign and date this form. If you're married filing jointly, then your spouse must sign as well. So we'll just say that we want this on the 5th, right? So that's the completed tax form. Now we'll cover part 2, even if it doesn't apply to John and Mary Smith's situation. We'll pretend that it does, because part 2 basically means that the IRS has already seen you default on a previous installment agreement. you owe a little bit more money, but not so much that it's in, you know, a different category of collection, and you've already said that your monthly free cash flow is less than uh, what the IRS recommends that you pay. So if you owe more than $50,000, you can complete this and then just attach the collection information statement. But if you owe $25,000 or more and you've already defaulted on an installment agreement and you say that you can't pay the minimum payment, then you're going to need to complete part two. So in this case, we're living in the United States. We're married under marital status. Do you share household expenses? Yes. Two dependents we claim on this year's tax return. How many people are 65 or older? We put none. We get paid biweekly, so that's every 2 weeks. Please don't confuse biweekly, which is every 2 weeks, with semi-monthly, which is twice a month. And so the difference boils down to biweekly payments mean that there are 26 paydays in any given calendar year, generally. Twice a month means that there are 24 paydays. You know, for example, 1st and 15th times 12, that's 24 paydays. So be sure about this distinction because it might screw you up cash flow wise if you select the wrong one. And then you'll enter your net income per pay periods, right? So let's just say that you're grossing $3,000 a month. Then we'll go into your spouses, do the same thing. Obviously, if your spouse stays at home or if you're single, then you can skip lines 21 and 22 and go straight to 23. So we'll just say that Mary earns about $1,000 per pay period. She gets paid bi-weekly. So then they're going to ask, how many cars do you own? How many payments do you have each month? And then whether or not you have health insurance. The last couple of questions, which are off screen, for that I apologize. Do you make court-ordered payments? And then whether or not those court-ordered payments are deducted from your paycheck. How much are those? And then how much for child or dependent care for each month. So if you don't pay, if you don't have children, you're basically and you don't have an ex-spouse, you're probably not concerned about 26 or 27. If you have health insurance that's automatically taken out of your paycheck, then you can skip entering how much your monthly insurance premiums are. So basically, this is just getting a little bit more detail on what the IRS considers to be mandatory payments. So vehicles, health insurance, court-ordered payments, and then child support if it's not court-ordered. So that's what we have for IRS Form 9465. If you want to walk through this step by step, we've written an article on Form 9465, which you can find on our website. Simply go to the website and type in IRS Form 9465. I'll put the links in the comments section on this channel, but you can go directly to the website and search for that form by number, search for IRS Form 433F, and any of the other forms and articles that I've mentioned. I'll put them in, put the URLs in the comments section, but you can look them up personally on the website. If you like our articles, please subscribe to our newsletter. If you like our YouTube videos, please feel free to subscribe to our YouTube channel. And as always, if you have questions or comments or concerns, please feel free to drop a note in the comments section or send me an email. Thank you very much and have a great day.